365, shake my hand, ladies and gentlemen, and welcome to another video, long-term wave analysis. We are continuing with our journey. This is technically the second week of me doing these things, and I'll continue until I'm done. Please don't forget to check out all the other videos that I've put up for you. Some of those trades are starting to play out. Look at the supplies being removed, look at the demands being removed, and what we say. The goal is to keep these videos as short as possible so that you can make clean notes on your trading journals. And if you don't really know how to use this information, think about it as a map. I am mapping out the price of journey historically, present, and then into the future. Into the future, we're not oracles, so we don't know everything. But what we're doing is we're using supply and demand to give us high probability trading zone. We trade in probabilities. We trade knowing that we don't know absolutely everything about the markets, but we can be sure enough in our strategy to yield at least an 80 to an 85% win rate. And that's what I'm doing here. I'm just trying to do the best I can as your GPS, right? So the asset for today's video is AUDCAD. And I'm just intrigued, right? I did this in yesterday's video as well. If you haven't seen it, please do check it out. When I looked at EuroCAD and AUDCAD, we also have retail traders leaning towards more sells, almost 3,561 lots are shorts. That's 63% of most retail traders on this particular platform are willing to sell AUDCAD, which makes up about 11,806 positions. 37% are long, but the majority is obviously short. So let's kind of figure out, what's going on. Remember, we use data. We look at data, we read data, we understand the data. We don't do what the data tells us to do. We do what supply and demand tells us to do in relation to all these other things, right? So AUDCAD looks like this. So this is technically speaking my chart from 2022. I suppose this is the daily time frame. I haven't been in this chart in a long time. I said I missed some beautiful buys towards the end of the year here, right? I missed because the last time I was active on this chart, we were selling. But I see, for whatever reason, I missed some beautiful buys. Most likely because maybe my buy orders are in the green zone, and so price never really got all the way down to me, right? But now let's kind of like take a really nice look at what price did, what price is doing. All right, cool. I see. Right, this chart is already marked up, so I'm just gonna pull up a different chart for you. We've been using, these historic brokers for this type of analysis. So this starts from 1979. I am on the 12-month chart. Remember, one candlestick on the 12-month chart represents 1 year of trading, right? So if you can back test your stuff, this would be a great way to do it, right? So I can already tell that there is something going on here. Historically speaking, since 1997, price has never been able to break through that supply. Since 1997, that supply has been no-go area, the stop zone, right, where buyers meet their maker and price is pushed down. And before that, you can tell that price was always a sell profile asset, dipping and dipping and dipping, right? In about, say, 2000, 2003, 2002, a demand was formed and then broken late on in 2008 with the banking crisis. I'm just going to look at that zone there, mark that green for you. And if you've been watching a lot of my videos, I'm pretty sure this exercise is becoming boring. And once it becomes boring, the real trading begins, because I want it to be boring, only not because you're watching me, but boring because you know everything I'm going to say. That should be your goal. You really have to get to a place where you can see what I see. And really, your ultimate goal is to become far much more better than me. If you're a subscriber, if you're a student, within the academy, there's always more room for growth. Maybe I've gotten so comfortable with my supply and demand multiple time frame analysis, maybe some of you will find much more innovative ways to make this process better. But the end goal here, guys, is to make money. All right. So if you know what I'm about to say, know what I'm about to do, that's good, right? Keep learning, keep mastering. If you're not yet at that point of mastering these basic rules, don't forget to check out the link down below, right, where all the stuff is broken down at a nice slow pace for you. Right. So this candlestick represents the year 2023. I'm highlighting it right now, but just remember, we cannot analyze candlesticks that have not yet closed because how they close affects our analysis, right? But right now, it's safe to say we've got what seems to be a bearish engulfing pattern, right? We don't know if that's how it's going to end, but for now, that's what it seems like. Let's go to the 3 months time frame to give us a better perspective. In the 3 months chart, I have actually got a broken supply. 2022 April. Remember, banks think in 3 months, take profit in one in a 10-year plan. So when price comes back, that a year later, markets actually exhaust all the sell pressure above the supply here. Could have just been a stop loss liquidity grab, and then price will continue down. But I'll be worried, a little bit worrisome about this. More importantly, in October 2022, markets reacted by forming a demand that was in line with the demand they did 2 years ago in 2020. And anything in this green zone is really quite problematic for sellers. Right? This is a big bullish order block area. This is a buyer's block, and the yellow is a seller's block. If I was to tighten my areas of value, right, to say, well, why did the supply break in April 2022 when price came back this year? Right, the answer most likely would be there's always going to be a higher supply. If you can find a higher supply, you might be able to find a better sell-off, right? There is a debate around the imbalance issue here on the 3 month chart, but I don't think that debate would stand much weight on the governing time frame, but we shall see. Price creates a higher supply. January 2021 feeds into this demand a year ago in January 20. Once again, January 20 created demand. A year later, take profit. Banks think in 3 months, take profit. This is what take profit means, guys. If I'm long as a bank and I start to close my longs, naturally, without doing anything in the market, shorts start to come about, right? Because it's like a seesaw. If I tilt the weight, markets never move like this. So this is a seesaw. Seesaw, the things that little kids play with, right? So one kid will sit here, and another kid will sit here. If these kids are equally weighted, if both kids are 12 kgs, right, then the seesaw should remain very much balanced. But that's not the type of markets and price and how markets move. Markets generally move in disequilibrium. In fact, we make money only during disequilibrium times. We make money when money is placed on one end. So if I in 2020, as institutions in general, push more money right into the buys, right, it means my seesaw is going to look something like this. But there is more weight here on the buy side. So this happened in January 2020. When I tell you that banks think in 3 months, which is a 3 month chart, or in financial quarters, that's what 3 months is, take profit in a year. If I start to remove all these buys after a year, which is January 2021, by virtue of removing buys without adding sells, I want you to hear me, by virtue of removing buys and closing my longs and taking profit, price will fall. By virtue of removing weight from the seesaw, price will fall. The price will fall. Once price starts to fall, we start to create momentum. That's the imbalances that we're looking for. Either we start to sell alongside, some people start to jump the gun, banks themselves start to add shorts because they really wanna eat. They eat up and they eat when the price is going down. And then all we have to do is to simply wait for the imbalance to become valid, and we come back, and banks have not created enough sell orders here. All of a sudden, the seesaw now looks slightly different, right? Now, my chart is very ugly, but I really hope that this helped. I really hope this example helped, because I keep repeating this stuff, but I wonder how many people truly understand it enough for it to affect your trading in a positive way. Banks think in 3 months, take profit in a year, in a 10-year plan. When you understand that, this is the beginning, this is the holy grail of institutional trading. You must understand how institutions think and how they move when it comes to price, right? So, AUDCAD seems in the last leg of last year, 2021 into 2022, was reacting to a supply, a sell-off, right? Granted, we know that there's some demand at the bottom. We know that there's another demand right here in the above, and we shall now see if it's now time for hands to switch on the seesaw I'm still struggling to get a long-term bias. Are we up? Are we down? Because for the most part, markets are just, working their way up and down. Right. So let's go to the governor for clarity. Right. So here's the monthly time frame now. Governor, like I said, all things being equal, right? So markets come here to this nice basic historical line. You see that line that we drew, the zone that we drew in the 3 month chart. But I started tightening up my zones here on the governing time frame for later on. When price starts to move back up, this will be our next big target, right? Clean break of structure here, and the break of structure was caused by this supply, not this supply, but this supply. So markets will naturally want to return to that supply that broke structure, right? And where is price going? Well, on the governing time frame, we can make the argument that price still has a little bit of more room to go to the downside. Markets haven't really made it. This is the month of April, already reacting to early buyers, that competitive area, but also could be starting to create a liquidity trap, right? So you'll see on your smaller time frames, the daily time frame is not small, but if you're a swing to positional trader, it's one of our smaller time frames, of course, that's a very big time frame. But you'll see on the daily H4, H1, where start to see equal lows being made somewhere down here. And then you can start to imagine that maybe one day price will grab that liquidity and come down there, right? And come down there. But we'll see as we drill down. Uh, Other thing to quickly point out on the governing time frame is as much as this supply was broken, and remember we pointed this out on the 3 month chart, price then created its own new supply to contend with. Our governing time frame, right, this monthly channel is absolutely important because this is what affects the 3 month thinking. This is what affects the mid to long term trend, right? And we want this trend, number one, want to trade alongside it, want to know who's in control. But more importantly, we also want to understand its alignment with the bigger picture, right? And when we get a sense of that alignment, then we can really start to position ourselves in a better way. On the weekly time frame, this is what we have going on here. You see this line that I've drawn with 3 month chart, where I say the equal highs will start being formed. Now in non-weekly time frame, a bullish engulfing pattern was drawn, but we can also start to tighten our zones, right? So within the monthly, there's some weekly area right there that price might get to, right? And within the weekly time frame, there are multiple supply. This is supply one that was inside that governing time frame, and then markets created a new supply, which is what price used to come down, protecting the original sell orders. Price used this to come down, and then we had a bullish engulfing pattern. If I draw a Fibonacci swing high to swing low, a bearish Fibonacci, we might find that price is flirting deadly with PCPs, right? So you can see here, PCP stands for potential continuation pattern, and that's what we have here on the Fibonacci, right? At 0,236, and price could have chosen 0,38. Price could come back all the way here. Price could get a golden ratio attack at 0,618, right? Price can retrace anyway it wants. Our job is to identify those areas of value. We're really looking for some fresh areas of value. I'm going to delete this. I'm also going to delete my Fibonacci just to tighten my chart. I'm on the daily time frame right now. This is where price is, where I say be careful. You want to start looking for those equal highs. And this is where price bounce on the daily time frame. All right. It looks clean and smooth and tidy on the weekly, but on the daily time frame, there was a bullish involvement. But look at this big red, a lot of sellers coming in. Yes, the buying withstands, but this area gets popped, right? If you look left, there's still more room to fall, but the point of this area gets popped. The question now is really significantly, where is price going? That's the question number one. Number two, what will stop price? We know how high up can price go, and will price even bother to come down? On the daily supply, we've got this end of March area of value that price used to really push all the way down. And that's where price closed last week, Friday. I'm making this video, by the way, on the 24th of April, right? So when I say last week, Friday, today is Monday, all right? So markets are opening this week here. And last week, Friday, this is the candlestick that we dealt with on the 22nd. And that's where, on the 21st, sorry, that's where price kind of was stopped again. I just want to see if there's confluence with anything on the weekly, no, not really. I mean, you'd have to look at this zone here, bullish engulfment, price goes up for the higher supply. All right, so it's yeah, not really. I'm just gonna quickly draw a proximal line here on this demand, and then we'll see what it looks like on the daily time frame. Yeah, man, I'm not impressed. When I struggle like this to get it out, I remind myself that there's so many assets in the markets. Only trade something that gives you that pure guarantee of high probability. The fact that I have to really beg price to give me clarity on this chart does not make me comfortable. Price is very choppy, right? And because of that, you can get a false reading in the price. But overall, you can see here the way that daily demand looks broken on the normal candlesticks. I'm on a king hashi right now. We're looking at price maybe creating equal highs here and then another tap to the downside. But if this area gets broken here, or rather this area gets removed, then it's a free run, right? Question now is, do you take a trade in such places? Well, number one, remember, after all your rules have been met, all your supply and demand rules have been met, you really want to make sure that you've got something that makes sense. This is about a 1 is to 2.5. It's not a perfect 1 is to 3. And then, you have to consider that this is fresh. This is a fresh area of value. This is a fresh area of value. And so this fresh area of value here has not been tapped. Nothing has touched it, right? So this is, a must make or break. Please consider the slight risk it poses. Either you take a sell and you take profit right there and you stop until this area is removed, or you take two positions. One position ends there, and then you hope to see what happens. If this area gets removed, then you get a better running price. You really do get a better running price. But if markets decide to reverse here, please note that it also makes sense, right? Unfortunately, that is the best I can do with AUDCAD. It's choppy, but its choppiness, all of it for me, is leading more to the downside than to the upside, right? Its choppiness, all of it for me, this is now the governing time frame, is leading towards the downside. Not for a long time, but there's still a little bit of aha. So on the presidential chart, we are very close to a government demand as well. Maybe that's part of the problem. Right. So if price does go up, just be mindful. Big supply was removed, so they opened the door to the heavens. But right now, price has kind of like reformulated some significant sell pressure on the governing time frame, and the weekly time frame seems to be in alignment with that sell pressure, and the daily time frame seems to be offering an area of value that's extremely choppy, that's been used and abused. But this is a characteristic of AUD cat. You can see green, red, green, red, green, red, green, red, green, red, green, red. It's very choppy, trends that way, right? So this could give us a good run to the downside. Go to H4. I don't want to do H4 time frames on this type of videos, right? But we can see something similar, better distribution than a lot of assets inside within a peak supply, right? If you look at this as a peak supply, clean imbalance, fresh touch, then we're here for a retest, right? So this is very possible. This is very possible, right? But if it's not, be aware and risk accordingly. I really hope this video helped you. Hope you've enjoyed it. Don't forget to hit the like, please. Don't forget to subscribe. But more importantly, for your own benefit, don't forget to watch all the other videos. And if you want a deeper understanding of supply and demand, then please do check out the link down below and register. Cheers.